Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada. It's one day before the Bank of Canada's interest rate decision. We're expected to cut rates by 25 basis points. Let's talk about the technicals that are driving this currency pair and what will be key going into that rate decision and after that rate decision. So let's get started. Let's start by taking a look at the 4-hour chart, and what we noticed in trading yesterday was at the low prices for the day, the price did find support buyers against this trend line. This trend line goes back to these lows toward the beginning of March and end of March, and connected to the low prices that we saw in the Asian session yesterday. Then later, maybe in the early European session, before the market started to rotate back to the upside. Again, the Bank of Canada will meet this week, and expectations are that it will cut rates. Especially with oil prices moving lower as well. So that is helping to push the dollar Canada higher, the Canadian dollar lower, and in trading here today, that move to the upside has been able to take the price back above the 100 bar moving average on the 4-hour chart and the 200 bar moving average on the 4-hour chart. But we are trading above and below that the higher moving average right through here at 1.36772. The 100 bar moving average is at 1.36532. It's hard to see, but you can see that yesterday the price did move above that level right here, but then found resistance against the level here before rotating to the downside and moving higher in the Asian/European trading session here today. You can see that closer if I kind of zoom in here. Take a look at this. You see how the price held that 100 bar moving average here. It would also tried to hold it here and held it here. So there was, but in between we did break above that level. So sellers were trying to keep the lid on the pair, but that was not to be in trading here today with the price moving above the 100 bar moving average here, opening the door for further upside. And as you can see, as I mentioned, we are trading above and below the 200 bar moving average currently. On the top side, however, we do have a nice little trend line as well that connects highs through here, here, and here. That trend line cuts across within this swing area through here. But ultimately, if the price is going to go higher in the dollar versus Canada, we need to start taking out the previous highs and having a higher high. If we go back in time, we have a high right here, a high right here, a lower high here, a lower high here, a lower high here, a lower high here, so you see the pattern on the top side, and I could say that we see the pattern on the bottom side as well with higher lows. So at some point, we do need to break above either there or move below there in order to push the price outside of this up and down trading range. In between, we do have the moving averages right through here that are going to help define the bias in the shorter term view. Taking a look at the hourly chart for this currency pair. Look at that. What we see here is a 100 and 200 hour moving average, because of the ups and downs that we're seeing, are now converged. Those levels come in at 1.3665. The importance of that is in short-term trading here today. If the price were to move below that level, we could head down. We'd expect to head down toward that 100 bar moving average on the 4-hour chart. If we hold support like we are doing right now on the corrective move, we could. That gives the buyers a little bit more control in the short term, or it does give them more control in the short term, and we expect that we see some bounce more to the upside here. So the buyers are holding on to control despite the fact that we're trading above and below the 200 bar moving average. We'll see if they can keep that control and push higher in trading here today. Just stay above that 100 and 200 hour moving average. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.